I'm in the 5130 strike lotto at 210 and 240. $51.14 target. Oh, wrong one. Shit. Come on, baby, come on. We're at $3. I could sell it here and be a happy camper and go to the beach. But I want 51.14. We might retest the 200 and bounce back up. YouTube, I'm sorry I turned you on too late. Scale some out here. The Donald. Spy breaking the 200. Oh, what the heck? This is a good little setup here. Don't be too afraid away on this. It had a nice little run up, and it's just consolidating. We got a hammer. We're going to get to the VWAP. I'm going to be prepared. Like, look at AMD pulling back to support. Apple, 176. Man, Sophie took a hit. Now, we were really bullish on this the other day. I thought it was going to break out, and it did, but it liked it and didn't like it. I saw it breaking out on earnings. I thought it was going to go up, but watch this setup here, man. We got a nice little snake breakout on this. I'm watching the Spy here. I'm liking the setup. Nailed it. Yabba dabba doo. Man, I'm nailing it. Break the V-wop. Ladies and gentlemen, my calls are at 340. All the way from 220. Now 350. This is my second trade, too. I'm off to the beach where the women are in reach. We hit the V-wop. So what do we do when we hit the V-wop? Randy? Now we're retesting the 200 SMA. Randy. I have done it. I have done. You have done it. I think we're going to go higher, Randy. Let's go for a double top. bubble top. They got a hammer. £9 hammer. It's a little too heavy for my size, This is an exit idea, though. I just want to let you know. But we're squeezing between the 200 and the VWAP. Now, this is what we did last week. We had that 200 SMA cross the VWAP, and we had a real nice bounce. So if we start to edge up that way, keep that in mind. That's called a 200 SMA crossover the VWAP.
Type move.
Okay.
That got overdone to the downside.
Meta down some.
Or they actually did come in and provide some intervention and step up. Now, again, oftentimes when the BOJ intervenes, there's not a lot of clarity and not a lot of details associated with it, but I just kind of think to what a different position they're in right now. And you look at this trajectory we've seen, again, this reaching now a 34-year high, basically up to 160, coming back down to 155, 156.
I'm surprised Google's down.
A reflection of the rate differential, right, U.S. versus the BOJ, but also what a difference between what we've seen as far as going back to like 2010, 1993, for example, where the BOJ was actually intervening to stem the strength in the Japanese yen. So, I mean, it really speaks to how the tides and currencies do change, and when they do, they stick around for a while.
It's also fascinating that the dollar has been so strong, and at a moment here when there's been so many expectations for like major changes at the Bank of Japan. I think outside the Fed is the most talked about central bank. And there's so many folks that keep thinking the dollar is going to go back down. The dollar's going to break. It seems so many. I think really about kind of domestic U.S. bulls that really want that dollar to break. They want the Fed to cut and stuff. But the relationship between the
Let's go, baby.
U.S. dollar and Japanese yen has told us pretty clear that we are still the strongest economy.
Declining volume.
Most able to hold rates firm. So that, to me, I think has been blowing up people's trading playbook a little bit.
It really speaks to how the BOJ is kind of limited in terms of options here for
Exactly.
one. Right?
We have options.
Yes.
If push came to shove, we could probably hike or cut and we'd be okay right now.
For two, I think it speaks to how they don't like sharp moves, right? And we've seen a prolonged trend to the downside with that really big move in the overnight session. So I think they felt like they had to step up. Also, I think, Oliver, it speaks to the fact that we should buckle up because we could see more of this continue in the coming weeks and months, right? This is not necessarily make an end to the story here, I think.
Yeah. All right, tell me about this week. What are we looking for?
Busy week ahead, not just here in the U.S. I'm looking ahead. First and foremost, we've got out of China, we're going to get the April PMI numbers. We'll get the Caxton manufacturing PMI data. That's tomorrow prior to them closing throughout the second half of the week. So a holiday in the area, but also Japan's going to have some numbers, employment numbers, retail sales. We'll get some industrial production data. Keep in mind the output had taken a hit after the earthquake there. We also have Eurozone data, CPI. We're going to look at first quarter GDP as well. So hold on to your hats, buckle up, because again, in addition to the Fed, the primary focal point, the data due out later in the week, the jobs report here in the U.S., we've got a lot going on. So again, another win for the bulls in many ways to see stocks kind of just holding in the middle of this range that we've seen over the last few weeks, especially after taking out the March lows with the conviction we saw at 5,100 for the SPX, 5,150-ish for the S&Ps. The futures, I think, definitely one should say, hanging in there's a good way to try it.
All right, busy week ahead here, not just for U.S. data, but the rest of the world too. Thank Ben. Appreciate it, sir. Host of the Future Show. All right, let's bring in Jeff Pierce. Let's talk some earnings. Senior Manager of Derivatives Trading at Charles Schwab. Hey, Jeff, McDonald's, let's go there. Staple in inflationary times. Seems like the markets generally like McDonald's over the last year.
Yeah, generally has been okay, although consumers have been pushing back a little bit against some of the high prices, and I think this is going to be one of those quarters where we see if that trend continues. On the expectations for Q1 earnings, which are tomorrow before the market, earnings per share is expected around $2.70, revenue about 6.17 billion. That would be up about 4.5% year over year. If we look at Q3, going back a couple quarters, that was kind of the first quarter where we saw U.S. traffic fall and some of the lower income consumers really pulled back their spending. It was the first sign that we saw that, they were kind of shying away from some of these higher prices out there. Q4, we did see domestic sales rise about 4.3%. That was in line with expectations, but overall global same-store sales came in at just 3.4%, below the 4.7 that was expected. The international market, if we look at the licensed market, that increased just 0.7% in same-store sales, while the operated market came in up 4.4%. That was well below.
Yeah, and inflation is killing us, you idiots. Your McDonald's are selling what for 16, 20 bucks a frickin' sandwich? I don't eat at McDonald's, buddy. Your food sucks. MCD. I'd send word off the 250 myself, the 270. God darn, 370 for these things. Uh-oh. What happened? Give me double top. Magnificent. Randy. Mike. Let's take this baby up. Boogie. I'm wearing a sleeveless shirt today. I'm a tough guy. Look at them arms. 63 years old and it's almost big as my head. They used to be bigger than that. I used to have these big old lumps on the back of my shoulders. They called me the 9-pound hammer when I boxed. I'd take on Pacquiao in my prime. I asked him to fight me once, and he ran away like a little chicken shit. I'm going to the bank. I love the SPX. I love the SPY. I love Apple. Don't let it die. Uh-oh. Microsoft. Snake breakout, pull back, boom. Inverse head and shoulders. Microsoft. I'm going to ask a question. What kind of pattern is that? God, this has been wonderful. If it's going to be this easy, man, I've really nailed this strategy down to a T, especially here lately. 420 time, Randy. I got in 210 and 240. 420. The shooting star. Slash ES is looking good. Oh, that's SPX. Nailed it. Out. Get out. Exit. Man, that was beautifully done. Let's walk through this trade. This was impressive. First, I'm going to turn off my air conditioner. I'm showing off my muscles today. What am I doing? Oh, I'm cooking water. Man, it was a nice trade. I just can't stop looking at it. It's weird. I'm like, I'm addicted to that. So I got a bull flag here. Can anybody tell me where support is? You know how to count to 3? You can trade with me. Tesla. Called a double bottom on the QQQ this morning. Invest, called an inverse head and shoulders on MSF Microsoft. QQQ failed it. Back the channel. Still looking trend line. Do you see the double bottom? Mike? I mean Tony? Okay, I'm gonna Tesla. I want everybody to have a major understanding about Tesla. You ready? I hate Tesla. I've always hated Tesla. We've heard nothing but that all year for 2 years, ever since Twitter. And even before that. They did their best to bash it, to beat it up, and it's probably one of the best companies out there right now living today. If you're not in bed with these people, you're going to get a lot of attention. So you've always got to remember that the idiots are always going to be questioning Elon Musk. To me, he's probably one of the best CEOs besides Welch from Home Depot that I've ever come across. Jamie Dimon ranks up there on top. But there are not too many of them out there that are rebels. So I support the cause. But always remember, on the back burner, if you get a real good breakout, they're going to come in there and try to short it. They're not going to bite the bottom lip. It was all a scam. They came out and they said Elon's not going to make the $25,000 car. That was a lie. They came out and bashed this auto taxi because he didn't have it done in some certain year, which any CEO or anybody that's in a business knows you can't always hit your timelines. Things get in the way, like the government and COVID and crap like that. So always remember, on the back burner, you're going to have that fight with them. And they're way bigger than you are. So you need to be more patient when you want to take the trade. When on a bottom, or right now we're bullish, but they can easily bring us down and get right back in it. But I'm more bullish now than I've ever been all year long, okay? Period. China. We want to thank Mr. Xpeng for this. So there's certain stocks you got to think like that. Apple is another one. Apple's always been a lagger. Although it's a great company, it's always been a lagger. So as you start trading, you want to build some kind of understanding what each company's like and how they are against the fat cats and what do they think of it. And I know, I'm real good at kissing ass because I'm a business owner, and as a business owner, you got to kiss ass. But Elon Musk doesn't kiss ass. Anybody that's owned a business knows what I'm talking about. You got to bite the bullet. Now, SPY and SPY back to the 200 SMA. That's right. 1, 2, 3. Where, oh, where are you tonight? Why did you leave me here? Adrian Broner, I would love to challenge you to a fight. Tesla inverse head and shoulders. Exactly. That is what it is. And we're going to a triple top. 192.09, right? Yoko? Supreme Court reportedly rejects Musk's bid to challenge agreement with SEC. Fierce. Like I said, man, I don't appreciate them people. Ah. Oh, man, that's a cool looking chart. Sellers above at 191. Yep, I agree. Microsoft hit my employee number 401. I had an employee number. It was number 401. I worked for an inventory service called AccuCount Inventory. And we inventoried Walmarts and AutoZones and all kinds of stuff. So I always kept that number, 401, as a good luck charm. I've traded stocks, but I see a stock hit $4.01. I usually buy it. Man, that is a cool looking chart, Mike. I don't know, man. Mike's getting a little bit too fancy in here. Fancy pants. Hey, I'm going to show YouTube. Look at this guy's chart. Well, if you were to grade that between 1 and 10, what would you give it, YouTube? Oh, he doesn't care if it's cool. Mike just won a Spank Award. I only give these out to the unruly. And see if he gets offended. When's the last time you had a spanking? Jen, you remember I used to give Vegas them spankings? Or did you know me when I traded with Vegas? She didn't like that too much. Jim, that's not professional. Oh. Well, it's lunchtime. I think we're going to wait for the 200 SMA on the SPX. Don't forget your VWAP charts. Oh, shit. This is the time of day you do not want to be aggressive. Hey, hello, what's going on? Hey, we're going down here to the bar, Jim. You want to come join us? Man, we've made a ton of money this morning. In fact, we're going to buy you dinner. We can't afford that trip to Mexico, but I think we can get you a steak. Well, I don't eat steak at lunch. How about a Philly? Well, you can have that too. Get in. 123 on the SPX, the 5130 strike. $51.30s. Blanket. Got a megaphone. $1.35. How'd that happen? Oh, let's do it again with no stipulations, Ryan Garcia's father says. I mean, not Ryan. Ryan's Garcia. Ryan's father said it. That'd be great. Whip Haney's asked for the second time. Break it. But you'll be around, but you're done. Come up 10 cents. Come on, break. 15. I think I'm going to get 160, 170. If we can break the 21. My hands are sweating. I'm all shook up. Ooh, yeah, yeah. Did I mention a bull flag on Tesla? Does anybody remember? Let me look at the EMA on this one. Where in the frick is it? Now what? I can't find nothing when you need it. I'm really going to work on this weekend. I got too many charts up here. '21 EMA looks better for sure. I'm going to start using that 21 EMA more often. Ah. Always clean. May I help you? If you don't answer the phone in 5 seconds, you're fired. 1 bis, 2 bis, 3 bis, 4 bis, and 5 bis. Well, that ain't the right chart. Shit. Did I get the right one? Yeah. We retest the 200 for a double bottom. Retest the 200 for a double bottom. Yeah. God. Always clean. May I help you? Hey, baby. It's been a long time. I know. Why you hang up on me? I love you. And you, all you do is call and want to listen to my name, my voice, but you never say hi. So the next time you call, will you please say hi? How do you do this to me? Does anybody know what it's like to be stalked? I've been stalked before. I got a story I can tell you. I went to this bar one night, and I wanted to go dancing. So I met this girl. It was like one of them things you look across the bar and she gets a glance of you and she looks back at you and then you keep looking at each other and finally get enough balls to go up and ask her to dance. So I asked her to dance with me, and we dance and talk, and I go home and she goes home, and I get a knock on the door, and who in the hell's knocking on my door? And a little bitty girl on the front porch, probably 8, 9 years old, looks up at me and says, "My mommy wants to talk to you." I went, God. I knew right then I was going to be a sugar daddy to somebody. So I went out and talked to her, but I felt so awkward. Can you imagine a woman sending her child up to the front door? I mean, she drove all around town to look for my car. And she found it. I mean, I lived in Sedalia, Missouri, a small town, but I mean, it was the freakiest thing I ever had happen to me in my entire life. My mommy wants to talk to you. Really? Is she pregnant? I didn't even have sex with her. By stage 5, who knows about stage 5? Green Machine, you've been to Winfield, Kansas? I played on stage 5 before. I got a picture of it. How in the hell did you know that? You want to see me on stage 5? 20,000 people looking over me? If I can find it. And what was I going to do? Oh, yeah. Huh, can't find it. Funny someone say stage 5. Stage 5. You've been all over, huh? Winfield, Kansas. Oh, shit. Okay, we're back at the megaphone. Megaphone support on Okay, watch SPX right here. The 5120s. $51.20s at 220. Megaphone with a double bottom here on the SPX. Ah, damn, man. If you hang up on me one more time, honey, I'm just going to have a total breakdown. Always clean. May I help you? We've been together for so long. Why do you keep hanging up on me?
Hi, this is Marin. The reason for the call
You're
is
calling.
there are some new state-approved $0 premium Medicare benefits in your area that might be available to you.
Really?
So do you have Medicare Part A and B?
No. Is it a gift? Can I have it for Christmas? My birthday's in February. How dare you? She actually said something to me. And what she do? She gives me a sales pitch. What kind of woman would do that? Soon she'll be knocking on the door. And her daughter will show up. He doesn't like to trade this hour. Mike doesn't like it. He hates it. He does not like it. You know why? Because I got Warren at lunch with me. Tesla won the self-driving car in China. That's right, Green Machine. That is right. Should you hold? so we got a triple bottom coming up on the SPY. Ah, Jim. Hello, I am a robot programmed to receive. May I help you? I am an AI generated call receiver. May I help you? Hello, my name is James Howard. May I help you? I am programmed to receive. That James Howard, he's annoying. Why do I get stuck with this number all the time? He thinks I'm his girlfriend. Men, do you know how hard it is to be rejected all your life? I can't even rely on a stupid telephone. If you can count to 4, you might make a little bit more. If you can count to 4, you might make a little bit more. Ford, I'm going to look at Ford right here. If you can count to 4, you might make a little bit more, Mike. Blanket. We're squeezing. Here we go. I just love it when a plan comes together. I waited for the break, and then I counted to 4, and I made a little more. Man, this is nice. Ladies and gentlemen, I'm up about $100 on this trade. Oh, that's the SPX. Oh, God, Jim. You fool. You can count to 4, you might make more. God, I've got this down to a fine art, man. I'm just so impressed. I mean, I got to be really not sincere with you. I guess not honest, but I mean sincere. I mean, it took a long time for me to get here. You know what I mean? And I'm showing you all something that I've took me 20, 40 years to learn. 20 years. I mean, it's just, and then I'm sitting here kind of tearing up because I'm like, shit, man, I wish I could have picked this up, when I first started trading. But it took me 18 years to really get good at it. And you just kind of, it's really strange. Out of the SPX on the megaphone. I mean, just, fuck, I need to start throwing thousands of dollars in this shit. You know what I'm saying? And really come out a big winner. Like all these other guys are doing. And I mean, I'm like 20 times better than them when it comes to charting. Call me maybe.
job ads. We've beaten any estimate over the last 3 months as far as jobs data goes. So until he sees a crack there, he's probably not going to cut, Kev, at this point, right?
I don't know, Tom. I have this sneaking suspicion that we actually might still see a cut, and if we are seeing cracks in the labor market, I think those cuts would actually be accelerated fairly quickly. The market does not want to actually see the job market and the labor market actually cracking right now, especially with the inflationary prints that we are seeing, because then the fear of stagflation is all you really need to create a lot of volatility in this market. Now, maybe that's going to synthetically tighten up financial conditions and does a little bit of the work for him, but I'm not sure if that's going to be the number one base case right now. You do not want to see the job market crack. You want to see it at a pretty healthy level. Now, can it go up to 4% for the unemployment rate? Sure, but on a historic basis, that's still actually relatively low. I just don't think that he wants to see those cracks, because once you start having that question and you still have the inflationary prints going to the upside, what do you do then? How do you answer to the market? You want to handle inflation, which is already hot, or do you want to handle the job situation, which is starting to see some cracks in there? That's a lose-lose situation. I think the Fed will capitulate to the inflationary prints and try to save the job market overall. Yep. I think that's going to be the structure right now.
Yeah, the jobs market, if it does crack, is that a trend, a new trend that starts where they really have to accelerate rate cuts at this point, because savings rates going down, consumers still red hot spending at this point. That'll end relatively quickly if we start seeing cracks in the jobs market. Kev, I wanted to get your take here on not only the data that's coming out. Earnings season's been really good so far. FactSet says about 80% beat rate so far. So we've quelled some of that anxiety here about earnings, and maybe we should be rallying, even though in April all 4 of the major indices are in the red.
But here's the thing. We're coming out of large cap tech about another week, and then it gets very sporadic. And this is a big week. Right. Amazon and Apple, they have to deliver, because you can make the case that large cap tech has been pretty mixed so far. Netflix, Meta, a couple big misses. And
I don't even think they were misses.
No.
It's just that the bar was so high.
Yes, I agree with that.
Little bit of a relief.
I agree with that. But the bar's going to be high in Amazon for Amazon. I don't know about Apple, but if Apple keeps rallying into the print, then the bar's going to get higher.
Right.
But there's still good.
There's Lilly.
Week, and with VIX.
Mike, I didn't even look at Lilly, and it's in the news.
Protection is not as expensive as it used to be. But remember, one last thing. Remember where you're on the
Had a
calendar.
pullback.
Coming up to May 1st. End of spring, going into summer. Careful on volatility.
Yeah, we haven't had a sell in May go away in a while.
Yep.
It used to be the mantra. Kev, real quick here. I mean, we've got an upgrade on Apple ahead of earnings. He's buying it. Bernstein basically came out of the note and said, hey, you know what? I like Warren Buffett's type of investing when everybody's kind of downbeat on it, that maybe you should start scooping it. Your thoughts here?
Yeah, I think there is, especially what happened with Tesla last week, I think there's a lot of optimism that they can actually, exceed the street's expectations. It may not be as bad. The commentary could be a little bit better than what the street expects as well. And let's see if that's going to be the case. I think also a bright spot here today that's not really connected to this news is the Tesla news and their work with China and trying to roll out FSD. That shows a little bit of softening relations, and maybe that's going to be something that can translate over to Apple and some of its operations inside of China as well. That could provide a little bit of optimism. So, I think that's probably why we were seeing a lot of these bids going into these companies right now, even though the geopolitical landscape and the fundamental landscape still looks a little bit bleak in the near term.
All right, let's take a quick break here, guys. Tesla up 16% today and blowing the doors off of everything else in the market. All right, take a quick break. We come back, we're going to take a look at PayPal. Stocks rallied a modest 8% this year and reports earnings tomorrow morning. Expectations extremely low in PayPal. Fast Market will be right back.
Oh yeah, it's time. Oh, you weren't supposed to change. The Bitcoin is down 750 points. Earnings. earnings. Sophie. Domino's Pizza. Post-market earnings. Logitech, Paramount. Transocean. Post-market earnings. Booyah. La la.
Every morning, every trade, always live. Expert earnings and
You know, I made it so hard, and the easier I make it, the easier it is to trade. I've seen charts where they were so cloudy you couldn't read nothing on them. I can look at this chart right here. If I came in the morning, I'd know to take that right there without even thinking about it. Because I can count to 3. And I can count to 4. If you want to trade with me, you can count to 3. But if you want to make a little bit more, try and count to 4. Boom! So we've got 3 different things going on here. We got the Tesla. We come in here first thing in the morning, and I get a knock on the door. Jim, is that what I think it is? Well, what do you mean, Johnny? Well, I went to grade school, and I had a real hard time in math. And I always got F's. Now I'm 39 years old, and you got me to where I could count to 3. I mean, it was hard to get to 3. But when you told me to count to 4, it motivated me. I was able to count to 4 and make a whole lot more. And then you taught me that head and shoulders inversed. And that really puts icing on the cake. And that time you told me to hit the second shoulder on the right and take the trade, damn, you're good. How many times does that happen? Man, I'm counting to 4. Mike, thank you. You made me a millionaire. Mike, I want to kiss your feet one day. He's not even on here, is he? I wasted my breath. Damn it. Can I kiss someone else's feet? I guess not, huh? You people are cold. Though you're done? You got a little too dirty in here for you? Whew. Damn, you're something else. My friend does the feet stuff. Around her toes. What? Ugh. Can you imagine onion feet? It's bad enough to have onion breath. I had someone try to play with my feet one time, and I said, "What the heck are you doing, girl?" It was a little gross. Hike. Wonder what CNBC's saying today about Tesla. I'm so much happier that I don't listen to that crap anymore. I knew somebody that collected belly lint. And made a pillow out of it. Took her 45 years, but she did it. Oh, Jim, you're something else. Keep it simple and keep it clean, and you can become a money-making machine. I think I'm gonna go get me something to eat in there if I have anything. Oh, I got a grilled cheese sandwich, potato salad, and chips. What time did Yoko give that inverse head and shoulders? About the same time I did. What time was it? I can't remember. Was it about the same time? Oh yeah. Right at the bottom of the 1, 2, 3, brother. Oh, I just got lost there for a second, didn't I? Probably good for some side. Oh, the prison guy.
Section. And because of their business model, I'm getting to my point. Aren't they more predictable and stable?
He's ate a few McDonald's and has high
than some of
cholesterol.
these other companies, because, like the movie said, they do have a different business model.
They suck.
Yeah, they do, and it's an exceptional machine. You know,
McDonald's is coming out with a cruise ship. They're going to have the hamburger on it, and Ronald's going to be there, and you can get all the hamburgers you want. They might even give you the McRib.
say that they avoid McDonald's, and I get that, but at the same time, the numbers don't lie. When you are in need of a known entity and a known quantity, and you want it fast, that's the place you go.
Ugh. Oh, God, don't ever post that picture again.
These other competitors simply
Ugh. Disgusting. The Big Mac.
In our app, you know, we'll give you a burger for $1. They're having to run some crazy.
Where in the hell are you going to get a burger for $1?
We cover McDonald's and Chick-fil-A are the two fast food companies with drive-thrus that people rely on the app and the loyalty programs in a big way. And so I think
I eat at McDonald's one time a year. Okay, I know you can die of heart attacks. And I do go to McDonald's once a year. And if I go through the drive-thru, I'll buy the people's meal behind me. And sometimes, man, you'd be shocked. One time I did it, and I waited and watched, and she turned around and bought the meal for the one behind them. I thought that was kind of cool. I don't know if you remember that phase or not.
To see, you know, Chipotle winning on that space, but you know, as far as foot traffic goes, I think that's going to be the key for McDonald's moving forward. Is the weakness that they've seen is some companies were starting to say that foot traffic was starting to lighten up over the first quarter. Do you guys see any of that data that might equate to this? Because Chipotle had a really nice quarter. Their same-store sales grew 7%.
Yeah, I think that there's probably more concern for foot traffic on a global scale. You know, in the U.S. and among English speakers, we actually see that you know, kind of negative trends starting to reverse and maybe flatten out. I think McDonald's has done a good job of coming back to the market with some more affordable options that they can showcase and get people in the door. I think that one of the keys we're going to watch for on this report, because it will impact the entire sector, is, you know, the average ticket size and how much that customer is feeling the pain, because I think it is starting to get substantial.
I went into
that across some industries, but especially in food prices and the cost of.
I don't know. Here lately, I don't go out and eat much. I like to cook my own food and however I prepare it. But it seems like lately, when I go into these fast food joints, they're filthy. They're just filthy. They used to not be like that. But the mop water, I don't think people know how to mop. Well, they go back in the kitchen and mop and then use the same water to mop the front. I mean, it's just nasty anymore.
From those all-time highs.
It's easy to do the math.
Yeah.
They're 10% off their highs.
Yeah, 302.
Now, yeah, 300 to 270. That's easy to figure out.
Right.
But I think this stock is just less volatile than other restaurant names because of the franchisee business model. It's more smooth. It's more predictable.
I do got to go get a mop.
And when they get these little sell-offs,
I'm gonna call him up.
Does a nice job of being lean and adjusting the menu and doing all these
Oh,
things. And so
Irish lady.
the size of this company, how about this stat? 150,000 McDonald's employees, but 2 million people work at the restaurants. Think about that. Massive.
Yeah.
So they are incredible in terms of the scale and the expertise that
How long ago did she send that?
I had a big breakfast yesterday for breakfast. Lovely. Awesome. Loved it.
I haven't been in probably 10 years.
I got to get my invoice for.
The breakfast.
Yeah.
That's the key.
Yeah.
The breakfast, the eggs are great.
Yeah, in the city,
For
I have
what?
too many other things
Yep.
if I'm going to get
April.
but,
Anyway.
yeah.
Looking towards this, you're right. I mean, the stock is $30 off its high.
Right.
So the paper money trade I looked at, going the 1 week. By the way, I'll explain why I didn't do more in a minute. I went in and bought the May 10th, sold the May 3rd, 280 call calendar for 60 cents. Now, the obvious thing that we talk a lot about in the show is, why didn't you sell the put vertical against it and make it for, because the $5 put vertical is trading about
Wow.
55 cents.
Yeah.
For $5. To get it up to 90 cents, you had to go $10 wide. Just
Oh.
very low premium.
And that would put more risk on to the downside.
Not getting paid for the risk. So this is a relatively inexpensive, trade. Because why? Because the difference in the implied volatility, 34 to 25. That's pretty significant in terms of percentages. And so this is a nice way to play a small recovery back in right at the expected move in McDonald's.
Yeah, I was just going to mention that the anticipated market maker move plus or minus $6.70 either way. That's 280 strike to the upside. Sets up with that. Buying the May 10th weekly 280 strike call, selling that same call on the May 3rd options that expire in just 3 days. Paying roughly about a 60-cent debit. There's your risk. $60 per spread on this one. Break evens on this one, Kev, go all the way down to 272 and about 288. Give or take $1 or $2 either way. So you've still got a nice wide range while you're still looking at that 280 level. So even if the stock stays right here, you can potentially profit on this type of trade. But this is just short-term basing off of those dispersion and implied volatility levels,
And
right?
don't forget Chipotle's earnings.
Chipotle spiked on earnings
Yes.
After a good report. beating
Chipotle.
Estimates, lowered estimates as far as foot traffic goes. So that's a good point to make going into this earnings report. You got some assignment risk on their short options that expire in 4 days also, so keep that in mind. But a good look at,
Springfield paper.
neutral to bullish call.
Here are the
or,
listings
call
for
calendar
Springfield paper near
in McDonald's.
Springfield.
All right, let's take a quick break. We come back, we're going to take a look at 3M. The industrial and consumer stock is flat so far this year into their earnings tomorrow morning. This one, low bar on this one also. Fast Market's coming right back after this short break.
Yeah, this Jim with Always Clean. Hello. Do you have some mop handles out there? Oh, kind that just have the mop, the regular old mop handles with a. Yeah. Just mop handle, I had the metal one broke on me. I had it for about 12 years, I think. It just rusted out. With the large mop heads on them,
Yeah, they don't twist in, right? It's like a quick bite.
Excuse me?
Does it twist in? Or
No.
does it, like, clip onto it?
Clips on. Not clips on, but I mean you put it in there, yeah. Like the old-fashioned ones.
You want the metal?
Yeah. Well, is that what? Yeah. Throw a couple mops with it too. With the scrub things on them.
Wooden one that's about 60 inches with metal head.
Is that it? You just get Rubbermaid.
We have the quick bite fiberglass.
I just had one broke, so I just need to get it replaced.
That's fine. I'll get you set up and then I'll put it in for pickup.
Okay. With a couple mop heads.
Okay. And just one hand.
Large. Yeah.
Alrighty, I'll put that in.
Thank you. I'll be up there after 3:30.
Sounds good.
Bye.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Fast fast market here on the Schwab Network. Before we took a look at 3M ahead of earnings, let's bring in Ben Lichtenstein, senior futures contributor here on the network. Ben, you got stocks, holding firm in the green at this point off the session highs, but pretty good session following up a good week for stocks.
Yeah, nothing compared to what we saw Friday into the end of last week, that's for sure. But holding on to those gains.
Do I like
The S&P
Chipotle?
up to 51.23 this morning. Dow just shy of 38,400.
I never have liked it at this price.
Above 17,800.
No.
It's dipping back below that level right now, but still up by 1/3%. And I just looked, Tom. You got the
No.
Russell, which just made a new high right now.
Me and CMG don't get along very well.
20 here, so.
I hate the place. I can't stand their
Big
food.
move up last week in the S&Ps and the Nasdaq.
I don't understand it.
Biggest week since no.
I don't think I'll ever get it with CMG because I just can't stand their food. I mean, it feels like I'm going in there and eating a blender full of soup. Mushy and ugh. It's nothing like eating a Mexican burrito at all. So now I hate the place. I don't understand why it's up so high. But it's outstanding earnings. People eat there. I'm just very biased with it, so I just can't trade it. If that makes any sense. I refuse to trade it. Wells Fargo news, Tesla pop overdone, and uncertain reverse in timeline. They can come back to the 200 for sure. Yeah, Jimmy C's. Double bottom, baby. You see, we come back up to the top. But, I look at that 200 SMA. Now I gotta get some food going before I get like a half hour and I'm starving. Shorted? Ooh. Car locks. You're on rest? Oh, car locks. New high at SMCI. So we got the SPY. I'm going to chart this up, and I'm going to show you how to, I mean, I did a video this weekend on how you can take many trades off the SPY and the SPX in one day. I mean, it's incredible how many trades you can take off this. So we took this one. We called the put. Now we got another snake here. So we got the snake breakout with a 1, 2, 3 into a 1, 2, 3 symmetrical flag. Boom. I mean, these calls went from $2 to 120 on the SPX. Right now, I sold them already, but that's where they are right now. I forgot my TV, my food. Come on, Jenny. Jenny, don't be a hero. Don't make a fool of your life. I got a yin yang and a triple top support. Off the 200 SMA on Tesla. I forgot about AMC. I said 306. Wow. What's going on to me? I even said Boeing would be up today. Let's see if I'm right. The first thing this morning, I said Boeing. I said they're not even dumb enough to buy Boeing today. It's up. Bank of America. So I'm going to go get my grilled cheese started, then I'm going to come back and go through the watch list. Jim, chart looks cleaner than mine. You got a pretty clean one. Would 5151 specs be considered a shoulder? On what time frame? What time frame, Jim? Yep. No. Yeah. Yep. Let's clean this up. We'll chart it up right here. So you got your left shoulders right here. They just go straight across, pretty solid. But if you go to the V right here, take it from the 200 and run it up on that. Yes, that would be the neckline. That's definitely a trend line. You can't beat that. Yeah, pull back to the right. Yeah, yes, 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 yes. Two-headed snake. Man, that's cool. Oh. I did all that typing and I didn't. Jim? What the heck? I need to hire a secretary. I'll give you $100,000 a year. And I promise no foreplay. Two-headed inverse head and shoulders. I really got off on this guy in Detroit yesterday. He said he didn't have the rights to vote until he got out of prison or jail or something. And that he always voted Democrat before that. And he says he's sick and tired of them. He was just ratting on, just kept going on. He says, if I ever catch a guy dressed as a woman in the bathroom with my girl, you're going to see. And he, you know, he's a fighter. I just got off on it. He says Chicago's turning. They're sick of it. Of being slave owners or slaves to the Democratic Party. I just thought it was so funny to listen to that guy talk. And I've listened to him before, but I really enjoyed it yesterday. And he was blocking people and It's stuck on me. Fuck. Why'd you do that? Ah. Please. Ugh. We broke out the bull flag. We've got a three-headed snake. Oh, you mean minute time frame. Now, So when you do a megaphone, we broke this megaphone and we started a new one. Megaphones, I think, is a major sign that we are in a very volatile market. I've seen, different things. So we had an inverse head and shoulders that Jen called out with a three-headed inverse. And it bounced off the mega. And we had a 1, 2, 3 break. And now we're going to go to the upside. Fuck. Jim, watch your mouth. Sorry about that. Jim doesn't like to be disappointed. I just had a seminar to better on how to order blocks and liquidity and charts. The current, we clean up the trading. Let me see here. Ron, if you go to McDonald's, will you do me a favor? Will you buy somebody a meal? Did I mute myself? Hello? I'm still here, Randy. We're going to clean up trading. Oh. We're going to clean up trading now even more. We know where price in general going to hunt the stops before reversing in most cases. You going to McDonald's? You, I want you to live. Can you hear me now, Randy? Randy. Like. What'd I put bullcrap up here for? Bullcrap! Oh my gosh. That's okay. That's too funny. I put bull crap. Oh, I'm not even stoned, man. This is too much. I put bull crap. It's supposed to be bull flag. Boy, my subconscious mind. That's funny. I think that's the funniest thing I've ever done. Bullcrap. Oh no. I guess. Oh. Gosh. That's funny. I put going. Bullcrap. I typed bullcrap in there. Whoa. You're right. That's for sure. No, I didn't mean to do that. But it's funny now, ain't it? I got to get something to eat. I'm going delirious. I got to walk away from here. Bullcrap.
For the full year for 2024. So they're setting these expectations for themselves. We'll find out if they actually get a chance to meet them or if they'll cut the expectations down for a while. But SoFi's guidance, though, it assumes that the lending revenue is going to be between 92 and 95% of the prior year's level. So that's another thing that analysts are looking at and that traders are looking at too.
You know, Renita, earlier in the show we were talking about, I said it's tough to get excited about a stock like Roku, one that's sold off so significantly and then it's just been sideways for such a long period of time. I feel like SoFi kind of falls in that category, right? It's come off that, hierarchy, those upper levels that we saw, and has recently been somewhat limited in terms of real conviction. If we could just pull up this chart, I think that's a pretty good example of, we're teetering around the 50, holding around this 200, just below both of these moving averages, holding about some kilos, I would argue, around that $6, $7 level, but again, I feel like tough to get excited about a stock. Not only this one, but this whole space in general. Here's SoFi, but take a look because now you've got SoFi on the left, I've got PayPal in the middle, and Square on the right. I mean, here's what I'm talking about coming off those upper extremes here. These are weekly candle charts. We're going all the way back to the summer of 2021 in each three of these examples. But yeah, I mean, you can see how this has been a bit of a disappointment for those that have been holding on to these stocks and the bulls in general.
I think it has a lot to do with competition in this space. It's so much more crowded than it was when each of these companies came out with their own unique services. When we look at PayPal, investors are closely watching this turnaround story for the company with its new chief executive, Alex Chriss, and whether or not he's making the moves that analysts feel like are the best for the company. So a Jefferies analyst said that it's still early to determine how he's doing, but sentiment has improved pretty significantly after the fourth quarter. That's what Jefferies says. And also they've got excitement around the Fast Lane, which is their online checkout service. It's supposed to be a faster service. But analysts expect adjusted earnings of $1.20 a share. That is a little bit higher than last year, just by about 3 cents. And then they're looking at revenue to increase more than 6% to $7.5 billion from last year.
So now when we look at, okay, PayPal is up, say, like 9.75% on the year. SoFi is now down almost 29% on the year. But then Block, which I think changed your darn ticker. I want to call this Square.
I do too. I want to call it Square too.
Oh, it's so frustrating. Square, Block, whatever it's called, that's down now about 2.5% on the year. So what can we expect from them? I know they have earnings later on the week, I believe Thursday. They're like the newcomer to the space, not new as far as SoFi is concerned, but new for PayPal. And they just have not been able to steal market share as if they've planned
And that's why they plan on going on both sides of the transaction. They want to dominate both the consumer buyers and the merchant sellers, and they have products designed for each. So the earnings do come out on May 2nd, and analysts expect earnings per share to increase more than 50% to 62 cents a share. And then they're looking at revenue to jump about 15% to about $5.73 billion. But investors are also looking at what's next for Cash App. Its merchant business is key to performance, and well, not just the merchant business of Cash App, but the merchant business of the overall company, Square, Block. I want to call it Square again because it's SQ. But they're looking at what happens with the merchant business specifically.
Because I think we all want it to, like, Square was a better, they need to go back to that old identity, right? I understand Meta, like, shifted their identity and it was a good thing. I don't think that Square Block's transition to this new identity has been a good thing.
No, I don't think so either, because certainly we're still calling it the wrong name. So.
And certainly shares are still down 2.5%, so that's also one argument to be made. But we will leave it there. Renita Young, Bloomberg's correspondent, appreciate the insight as always. Coming up next, it's time for AT&T, which is seeing some love from the analyst community after its earnings last week. Shares are up slightly on the session, but also are needed of a lift this year, as we're only up about 2% on the year. We'll discuss more with George Tillis coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence.
Honey, every time you repeat this story, it was all lies. It was not turbulence. It was my hands massaging your head. Don't you remember I was sitting behind you? I got the wrong burner on. Wonder that smoke funny. Shoot. How dare you. Make sure everybody drinks plenty of water.
Per se, unless you adjust for it, is essentially the dividends that the company's paying out, which is really what this company is investable for. If you consider last week, just to give you some context, the earnings per share were actually down about 8% year over year to 55 cents. Sales were also down about 0.4%. They actually missed by about 530 million, coming in around $30 billion in sales. But they did denote in their earnings conference call that they're actually seeing some better margin capabilities, especially in their enterprise wired communications division. They also see in their wireless services division growth of about 3%. And effectively, I think this company, it's really overlooked from the standpoint of its price action per se, because if you look at it from the last 5 years, and this is also inclusive of Verizon, these are the two largest telco service providers in our country. They've been down about 30%, but they have been paying dividends that entire time. And if you look at AT&T's conference call statement, they denoted about $18 billion in free cash flow, low capital expenditures, and they're paying about half their earnings out in dividends. So holding this stock, you'll earn about $1.11 on an annualized basis in dividends. That's about half their $2.20 a share in earnings estimated. And that yield is about 6.7%. So obviously there's going to be a risk premium to owning an AT&T stock for the dividend, but you're also earning essentially a little bit more than you would on a risk-free return basis, let's say a short-term deposit or a U.S. government treasury bond.
Here, and before I get into the chart, I just wanted to point to Barclays actually upgraded AT&T, citing the mismatch between valuation and improvements in growth, quality, and execution. They now have the stock with an equal weight, from equal to overweight. They left the price target unchanged at $20, but take a look at the chart here. I just wanted to show you T-Mobile. This is, again, one of those stocks that's come off that upper level. It's really been struggling to reflect the broader market strength we've seen in terms of some of the other major indices. But I looked at, and just kind of a comparison, T-Mobile, you mentioned Verizon, a similar pattern, right? But I also pulled up T-Mobile. So we've gone from AT&T to Verizon. I'll bring them all up here so you can see them side by side. On the left, AT&T, in the middle, Verizon. What's T-Mobile doing right that the other two aren't?
So here's the thing. If you look at the three major telco providers, all of those names I mentioned, AT&T, Verizon, and T-Mobile, T-Mobile is actually still growing their network. And effectively, when they spun off their Sprint division, they generated a lot of cash that they used to finance their tower.
AT&T sucks.
Their core networking.
Now let me tell you something here. Don't even invest in this company. I got a letter, an alert, that they have been compromised, that everything that I have, I had them, 7 years ago, and I had them for about a half a year. I couldn't stand it. I couldn't stand this company for phone service. I mean, AT&T sucks. And this guy's pumping AT&T, so I had to shut him off. So I called the people up and I said, "Man, why you got my records on file 7 years later? Now I'm compromised." I said, that's a bunch of, first person I called hung up on me. I was pissed. I couldn't stand the company to begin with. Once I had them, I said, "God, this is a horrible service." And he's saying it's number one. That's bullcrap. I mean, people buying AT&T, I don't know what's wrong with you. Unless you got good service, but I had a bad experience. Very bad. Now I even had it worse. That was this week. It might have been yesterday or Friday or something. I called him up.
Maybe extinct animals, but we will leave it there for Next Gen Investing for this Monday. Ben is joining us all week long for the fun on the show, so look forward to that. But that'll do it for us today. The watch list with Nicole Petalides is coming up next.
Schwab Bank Investor Checking, the checking account built for investing.
Goldman Sachs new highs. Did you see the bullcrap mannequin? That's still funny as heck. I can't believe I typed that in there. I've noticed lately when I'm writing stuff down, how'd that word get in there? And I had to go back and read, and oh, okay. What'd I just do? Oh, I gotta go check my sandwich. It's hard to, thought I had that down there, but, huh. I was going to trade that. This here's SPX this morning. So we had 3 white soldiers, and then we had the sell-off. So you draw out your snake, and you count to 3, wubbits, tubus, and a freebie. You break out. You're not in the trade yet. You're kind of getting ready for your sandwich to turn over. I'll be right back. So now that your sandwich is turned over and you didn't burn it, come real close, you get a knock on the door. Hey, Jim. Damn, man. That sneaky snake trading strategy you got is perfect. What do you mean? Well, I found the snake. It broke out. It pulled back a higher low, and I got in it, and I boomed it. You did? You mean you watched the snake? You seen it break out, and you waited for the pullback, and you went boom. What made you go in that? What was the decisive decision for you to get into that trade, Johnny? It was the hammer. You talk about the hammer. And then I just watched all the other candles after it. It lined up with the body of that hammer, and I said, okay, I'm going to take this trade. We got inverse hammer down here and a shooting, well, an inverted shooting star. It could go to the upside. And then you got this big thing right here. You got a hammer. Wubbis, Tibbis, and a freebie and a forebie. And I got out, Jim. What you would call a double top. And then I went in the kitchen and cooked a grilled cheese sandwich. And I came back, and by that time, there was a whole new snake going on. What do you mean? Well, you know, I learned how to count to 3, and then you taught me how to count to 4. So I made a little bit more. What do you mean? Well, I'll draw it out for you. Wubbits, Tibbis, freebie, with an inverse head and shoulders. Damn. Jeb, man, I'm making killer money now. You taught me how to count to 3. Now I'm counting to 4, and I'm making a little bit more. I smell burnt toast. Does anybody want to buy my vacation to Mexico yet? Mike? I should put Mike in charge of the fundraiser. That was a good call, Jen, off that shoulder line. Did you take the trade? You called it. Pray do me? Pray do me. What's that mean? Just some kind of Spanish? Pray do me, baby. Last time girl said that to me, man, she took me hook, line, and sinker. Oh, read my chart. Is that what Play-Doh-Me means? Read my chart? Oh. Sandwich. Oh, shit. Well, I failed. I think I failed. I'm going to eat it anyway. You ready? I got to see if I can see this. Is that too dark? That's perfect. I have some concerns about this. I'm dreaming of a white Christmas, one that I used to know. Remove that drawing and count to 4. 'Cause I think you might make it a little more. We got a bold flag with a 1, 2, 3. It looks like a falling wedge to me. I think it is, and going to count to 3, 'cause I believe in liberty. Amen. Read my chart, damn it. Where's it at? I don't see no chart. Rodney? Bull flag. God darn it. Oh, I could have done this. Wow, check it out. 200 SMA. We have two dojis right here. Hey, I reached 124. Okay, what's going on? Oh, send report for development team. Unexpected errors happened. Unexpected error has happened. Ooh, I just farted. Sorry about that. I didn't mean to do that. Lucky for me, mine don't stink. Only if I eat hot dogs. It's probably pretty loud on the mic. Your toss is down? Them bastards. They're after us retail traders. Jim asked me a few weeks back why didn't I use the 21 EMA. So I got thinking, why don't I? Always waiting for the 50 EMA crossover. Sometimes last week I decided today to use it, and bam, 68% on the downside. It took puts, and hell yeah, franchise. It's called the 20, I did videos on it. Where the 21 cross, let me look it up. The 21 crosses the 9. Let's see, I can probably type it in.
Should good car insurance cost you a month? $80?
Costs too damn much.
$20? Nope. Try $38 a month. So there's a comparison shopping site that finds you lower car insurance rates based on your info. You just put in some information that the site needs to find you lower rates. Stuff like, where you live.
Good morning, retail traders.
So YouTubers, someone in the room kind of made an interesting statement here, and I want to share it with you.
Yesterday
It's all about getting, what do you call it? I've been trading a long time, so it took me 2 years after being yelled at and griped at to trade options. So I didn't do it. And one day I was laying in bed and all of a sudden I said, why am I being too stubborn? I want to start learning how to trade options. And it's the same thing with someone in the room heard me talking about the 9 and the 21, using it as a crossover. And if you go into a lot of my charts, for example, just kind of check this out. So we've got the snake, and we got the breakout, and then we got the pullback, And we know that we're set to take the trade because we've ran out of the channel, but I need one more indicator to really get me in this trade. And it's the 9. The 9 is bearish as long as we stay under it. So once we pop above it, the 9 crosses over the 21. And then we respect the 9. And we get out of the trade once we start to stop respecting it. And that is a double top. So it's called the 9 over the 21 crossover. And this here is this is the 9 over the, let me type this in. I got different charts set up different ways. I kind of personally like the 9. Now listen, franchise. 9 EMA over the 21 SMA. Darn it. I wonder if Ryan Garcia can type. Oh, you stupid. Okay. Okay, calm down. Take a chill pill and remove that and go up here and hit the T. Go back down here. Type in the 9 and don't type in bull crap this time. Dadgummit. I typed in bullcrap again. I gotta stop that. Oh, Black Betty, Bam Jam. Betty had a child, Bam Jam. Damn thing went wild, Bam Jam. She got nice titties, Bam Jam. She's always ready, Bam Jam. Come on now. I'm going to tell you a story about me and Zach Morris. We started trading together at the very first. And when I first started trading, I didn't want to hear any cuss words. I mean, it really upset me. So him and I got into it one day. I said, damn it, you just shut up. I told him. And it really offended me. And now I just can't control myself. I gotta stop. Oh. The video. Yeah, I about left the room because of that.
down on it. It started going up, the pattern did, and we're matching up here to this resistance level. And we're gonna have a slow correction into jump down. Inflation, the volatility is gonna.
Better allergy relief.
I'm gonna have a better one than that.
Live Claritin Clear.
New Leaders. Nationwide helps financial professionals identify their clients' long-term care needs and then plan for the
Thought I'd done one just on the.
like I'm at a loss because of your
That one. That's that one. Oh, it's a 9.
Muse. Do you love Muse? Do you love Muse? Give me smooch.
No, Vegas and Jim. So,
Hello, this is Boil Your Wort Right by Washboardjim, which is I. Boil your wort right, boy. Boil your wort right. Can't wait to taste it when the timing's right. Gather some my friends, boy. We all shared around the friends came over and we all hopped around. Boil that wort right, boy. Boil that wort right. Can't wait to taste it when the time is right. Malted barley, measured pound by pound. Another friend came over and we all shared around. Boil that wort right, boy. Boil that wort right. And
So I sparged my greens, boy, got every last drop, turned on the cooker and added a little hops. Boil that wood right, boy, boil that wood right, ain't wait to taste it when the time is right. Thank you for the homebrew, really meant a lot. Next time you come over, I'll share some of my crop. Boil that wood right, boy, boil that wood right, ain't wait to taste it when the time is right. Thank you for the home, really meant a lot. Next time you come over, I'll share some of my crop. Boil that wood right, boy, boil that wood right, ain't wait to taste it when the time is right. When the time is right, when the time is right. Boil that wort right by Washboardjim. Thank you very much. Have a great day.
When we look at finances from a high level, it can be really overwhelming, and I really focus on taking action steps and bite-sized pieces of how do you get your budget under control, where are you with your credit, how do you start saving, what investment strategies should you be using, what about investment philosophies, and really putting it all together so you can take control of your finances. And if you need help from a financial planner, you have better questions to ask.
Yeah, because you're actually more organized. You're ahead of the time. It's sort of like studying before you go to see the teacher and then study for the test again, right? In the meantime, I want to go through this because you have 6 steps. And maybe we can sort of blow through these. I mean, one is just sort of clean up. Get rid of some of the apps and things you're not using. Save money right there, right?
Yeah, and then organize a lot of people, if they get into their finances, they start downloading budgeting apps and they have multiple and they're using some. So really just detox the digital finances on that and see what are you using, the ones you're not, just get rid of them for right now.
Right. And how about when you have this credit card that sort of never goes away, you keep paying the minimum because you have 25% rate on it. What do you do with that?
Call. See if you can negotiate with the creditors. Even insurance policies that you have, springtime is a great time to just pick up the phone and say, what promotional offers do you have? And then look if you can do any transfer of credits and see if they'll decrease your interest rate overall.
Yeah. Yeah, you also said looking at the current economic climate, review financial strategies. What does that mean and what's our current economic climate now?
To take a look at it, I think sometimes people do set it and forget it with your finances and investments, which is good because you're getting involved in the markets, but maybe at that time your income was different, your expense situation was, maybe your job stability was different. It's a good time to take a look at the current economic environment with interest rates. Do you have too much overweighted in cash? Do you want to put some more in the markets? And really just look at what that is, but also leverage the professional help. Don't be afraid to pick up the phone, call either your retirement provider, your financial planner, and ask them, do my investment strategies still align with my financial goals?
Something tells me you're not a fan of buy now, pay later, because you said set aside the funds. Think about that trip, the back to school cost, vacation, whatever. Don't do it, put on the credit card and say I'll pay it later. You're trying to get into the habit of getting more ahead of this.
Yeah, and if we know these are coming, we know the back to school costs, if we know we're planning a vacation, start carving out money every single month for that so you're realistic with yourself. That way, if someone dangles a trip in your face and you're like, I really want to go, but we have to put it on the credit card, you know what your budget is.
Yeah. I think it's also this sort of idea of saying no.
Yeah.
No, I'm not coming to this, and I'm not going to that, and I'm not giving to your 22 charities that, I sort of got into the habit. Every time someone asked me, I would try and
Say yes.
I try and say yes to everybody on everything, and then you realize that you're sort of left, with an empty bucket, right?
Yeah, and you're not alone. I think many people are feeling the higher expenses at the grocery store, just higher living expenses overall. So also speaking up, you're probably speaking for other people as well, and they might feel more comfortable saying the same thing.
Yeah, I'm not a fan of loud budgeting like people like to.
God, man,
sort of
come
say,
on.
"Well, I'm on a budget, and I've never really been one like that. I sort of feel like people want to be more private about their finances, and that's okay too, I guess, but you need to have the financial knowledge. You said just sort of keep yourself updated on all things about finance, right?
Yeah, and I think we all have different strategies for learning and things that we like.
She holds a briefing.
Both players in there, but so that sort of cooled some of these stocks that were heavily invested in electric vehicles, and we've seen kind of NVIDIA in some ways suck some of the oxygen out of the room because it's all been about AI and not as much about automotive. But if we don't have a healthy automotive sector in the United States and globally, we don't have a healthy economy. So for the long haul, it's a great market to be in semiconductors.
Yeah, and look, we're hearing from some of these. Olivier.
I don't think the car industry's that hot right now, sir. So if you're thinking that we can't have a good economy because we need a good, it ain't working. I've been to the car lots. They're crazy these days. Ain't nothing like it was 5-10 years ago, or even before that.
It's not so much a question of EVs being soft or not soft as much as the software-defined vehicle. And the software-defined vehicle doesn't care what kind of drivetrain it uses. It could be EVs, it could be hybrids, it could be fossil fuel. But all of the chips and all the screens and all the capabilities that are going into vehicles, from telematics and experiences to ADAS and automatic driving, are going to continue to move forward. So I think it's all upside for the semi market. And on devices and data center, obviously data center is taking off, and a lot of data centers are upgrading to be able to drive or take advantage of the AI revolution. So that's not changing. So that's all upside there as well. And then on devices side, we have a new cycle starting up soon with PCs with on-device AI, essentially kind of like resetting the purchase cycle. So I think that's going to have a huge impact, but probably not until the beginning or the end even of H2 of this year, with an acceleration ramp into 2025. And same with phones, but it's a slightly different thing. So I think that the no-brainers, NVIDIA, don't sleep on AMD. AMD has an excellent GPU offering that's starting to eat into NVIDIA's market share, especially for data center. And then the CPU players are really powerful too. It's not as much of a volume play as the GPUs, but CPU is also essential for AI.
Yeah. I want to go through some names here because we did hear from onsemi. In the meantime, Susquehanna, Deutsche Bank, and JP Morgan all have been cutting their price targets a little bit. I mean, by about $5. They've been pulling back a little bit. The earnings did beat, guidance disappoint. Whatever. driver. But what did you think about onsemi?
Quarter. I mean, they're doing pretty well, but I think it bears noting that the last full report we have for the global semiconductor industry was for February, and overall, 16% increase in global semiconductor sales. So there's still plenty of demand out there. On Semiconductor is a great company, and they give us some forays into EVs, data, power management, and things like that. They're all their products are essential for this modern economy. I don't think they're going to have a particularly strong year overall from a standpoint of earnings growth. So in that regard, you can think of from now to the end of this year as a consolidation period for the stock. I think NXP is going to end up with strong quarterly, strong annual earnings this year. I don't think it's going to be what it was before. There for a while they were growing, earnings 150% a year, something like that. That's not sustainable. So I'm looking for this year, maybe they'll have a 40 to 50% increase in overall earnings per share. AMD is an essential, you and I have talked about this several times in the past, Nicole. It's still an essential stock. It doesn't get nearly it's a strong number 2 in AI. That's just lack of a better term. So, and in terms of the price of the stock, it's much cheaper than is NVIDIA. And they are, Lisa Su has done an amazing job with that company.
Yeah. And Olivier, we're waiting for NXP Semi. Is that one that you would buy ahead of the game? And if so, which names do you think are the buys today? Because you talked about a lot of the concepts, and I know we even talked about, how things can expand in the world of AI and sort of crossover with semis and all that. But, which names do you like at this point now? Any thoughts on NXP Semi ahead of its numbers?
Well, I'm a tech industry analyst, so I'm not going to make any recommendations on buys, but I will say that I also agree with Michael here. NXP is kind of a long-term play, and they're not going anywhere. They're going to keep getting stronger, and the opportunities are going to keep coming. I think what we need to think about just broadly about this year for a lot of these stocks that have been doing really well, a lot of these tech companies that have invested well in the right pillars, right? The devices, the data center, automotive, and IoT. Is that this year is going to feel a little bit like a reset, right? Everything's going to calm down a little bit. We're coming back from a down cycle in PC. Data center is sort of adjusting to the change. And so I think everybody needs to lower their expectations a little bit about earnings this year, but look at the space and realize how much growth is coming in the next 5 to 6 years. But there are two companies that do attract my attention, and it's Micron for memory, because you need memory for AI. And SiTime, which is a company that does timing chips for data centers and other applications that are essential to AI as well, especially with huge amounts of processing.
Okay.
Yeah. So those two are worth a look, I think.
Good. Good. Thank you both so much. Great to see you both, Michael Robinson and Olivier Blanchard. Thank you. Appreciate it. That's going to do it for us here on the watch list. I'm Nicole Petalides. Download our free Schwab Network app. It's available in the Apple App Store, 24/7, schwabnetwork.com. Thanks for being with me. Market on Close, Oliver Rennick is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced
Always clean as Jim.
Hey Jim, it's Sydney at Springfield Paper.
Yes.
Are you a dust mop or a wet mop?
Oh, wet mop.
Okay, I was just double checking.
Okay.
All right, thanks.
Bye-bye.
bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week.
He had a decent bounce on the SPY, and look at that knife.
But that's about all we got right now is a small gain. At least it's positive, okay. Keep in mind that the second half of last week was pretty good, so at least we're not giving it back right now. That being said, kind of failure to rally too. Tried, and in the last couple moments, really in the last hour, the market pulled back, and then a pretty strong tick down again, literally like as I just sat down. So I'm looking for information on where that's coming from. Don't see anything right now. But anyway, we are basically a little changed. NASDAQ trying to hold on. You do have that big move in Tesla. You've got a really nice move in Apple as well. VIX has been down on the day. That's kind of the best way to start, I think, this week is just looking at the way the VIX has traded, in particular next to the dollar, because we've been under macro pressure. And we've been finding some relief from earnings.
What was I thinking about?
Earnings relief, though, hasn't quite been enough, given that we did pop last week, but we didn't reclaim any of some of the key levels that were broken on the way down. Namely, I'm thinking about 5,200 in the S&P. For NVIDIA, 850 is still kind of where we're dabbling in the high 800 range, with NVIDIA at 871 right now. Slightly lower on the day, hasn't been able to catch a bid. So we've had some of that solace found through earnings that worked, but we still got a ways to go. VIX below 15 is encouraging, though, for bulls, and given that we had a pretty big pop, took VIX back above 20. We had some financial condition tightening because of those macro forces with sticky inflation, but better than expected economic outcomes generally. The dollar and yields have been moving together, tightening basically the noose, but we haven't quite strangled all the risk out of the market just yet. Note as the dollar kind of plateaued, the VIX came down substantially during that period. The dollar really is a good proxy right now for the amount of complications.
Watch the SPX here.
Of stress that inflation is posing. If the dollar turns around and continues.
We're definitely at the bottom of this here flag. I might scalp it here. The 5,100.
Superficially, my instinct is equity people should be tapping the brakes. Yeah, that's a person who's been pretty bullish too.
Sure, and listen, I think Tony's great, and I think he's probably right. And what leaving aside what Solis is doing with the fund or not, when you look at the size and the scope and the scale of the rally off the October lows, and then you layer on top of it the stickiness of inflation and the what will probably be an ongoing shift in the Fed's narrative coming from Jay Powell at the meeting later this week. I wouldn't be surprised to see some dampener on the market for a little period of time.
Is that what you think? You're going to get a change in tone or a change in language?
Well, I think you've already had it. I think what it's shifting to the Fed meeting later this week, and we're going to bring in someone else.
It starts tomorrow. So
yes,
right. Going to be front and center here.
Sure. But I think it's going to be hard for him to say, as he had been arguing, that the data was going to shift in a way to give them confidence that inflation was returning back to 2%. And when he has the press conference on Wednesday, my expectation, and I think everyone's expectation, is that he'll...
Man, Amazon's double bottom,
comment, which is that he doesn't have
triple
that
bottom
confidence right now, and that's going to continue the shift in the narrative away from we want to cut, or what sounded to us like we want to cut by the summer, to something that'll be interpreted as we just don't have enough data to cut by the summer.
I mean, let's bring in our expert, Steve Leisman, our senior economics correspondent.
expert.
So, Steve,
Yeah, your expert said that we were going to have 6 rate cuts, if I remember right.
Confidence that we're heading back towards the level we need to be?
I think he has to skew more hawkish about the current data. But I got to throw something back at Dan, because I actually don't know the answer to this. The thing I'm interested in here, Scott, is and this may sound second derivative, but does Powell have the confidence that he will get the confidence? In other words, does his forecast remain that inflation will come down in the future? That is...
Oh, God. I really want to... It's never going to work. The way they're doing this is never going to work. I'll give you one reason why. The government won't stop spending. They just won't do it. We're in 2 wars we're funding. Raising the rates at this time is not the smartest move in the world. It just wasn't smart. Not during the world wars. It's just not smart. And they just argue back and forth, the same lines every day. It won't work until the government stops spending. We spent $18 trillion printed money, not counted the unfunded liabilities, and then the regular budget. So, in the past 4 years, we got 12 new illegal immigrants on welfare. The unfunded liabilities that go with that are going to be uncostly. It's just never going to work. It can go on forever. This administration spent almost twice as much as Obama did in 4 years. You got to think about this. I mean, that's a lot of money. And Brock, it was 11 trillion and about 60 trillion unfunded liabilities. So I mean, it just won't stop. So I have to turn them off because they just keep talking about the same thing over and 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 over. his expert.
Just moved on these Treasury quarterly financing estimates about the number to which they're going to have to borrow, and they look to me to be higher than prior estimates, and I wonder if that's why the stock market's lost like 100 points almost in the last 5 minutes, and the S&P now is, I don't know, about a range of a 10-point swing. It was up and now it's lower too. So, I mean, I guess the point, Steve, is there are a lot of moving targets on a lot of different things.
It is a multivariate equation, and Dan Greenhouse will smile when I say that, I believe. And the Fed is really just one of them. And not only, you know, you have, the one good thing we have going, Scott, is when I look at the economy, my assessment at this moment is we have risks, but there do not at the moment appear to be evident weaknesses. I know you had Parker on talking about the weakness of the consumer. Well, you don't see that in the March consumer spending data that the government put out. You don't see it necessarily in our CNBC retail monitor or some of the other things. Yeah, there is some talk about the weak consumer, but we've had that talk for quite a long time. There are risks out there, but not weaknesses. And so all of that is part of the reason why I think the Fed can lean hawkish and will lean hawkish and keep this idea of these higher rates, which, by the way, don't forget, they are restrictive. They are very restrictive. And there's an argument that the Fed could trim a little bit without really have much effect on that restrictiveness. It just won't because of the optics of it.
Yeah, just to give more context to the headline at the bottom of the screen, too. I mean, I remember the last estimate that came out was below expectations, and that maybe took a bit of a simmer off of where yields were going, and the stock market definitely got a jump on that, because I remember I was here doing the show the day that happened. So it works both ways. If the estimates come in above the funding estimate, you're going to have a little bit of leakage in the market, but we'll follow it. Steve, the next couple days are going to be interesting. You'll be all over it, and we'll hear a lot from you, and I look forward to that. That's Steve Leisman. Let's bring in Shannon Sakosha now, Neuberger Berman, NB Private Wealth Chief Investment Officer. It's nice to see you as well. So, you know, game out this market in what is a especially pivotal week, yet again, the busiest of earnings season, Fed meeting, jobs report, everything.
Yeah, there's tons of push and pull here, Scott. So it's macro versus micro, it's past versus future. Coming into this earnings season, you know, it wasn't all that demanding from a top line and bottom line perspective. And so when we think about what the market was really looking for, is that we've been looking for that guidance. And so a lot of people are pointing to earnings season not being that bad and probably better than expected. Yada, yada, yada. We see that all the time, especially on the bottom line, and especially with a lot of the cost cutting that's gone on over the last 12 months. But if you look forward, we're really looking at guidance. And, you know, what are people guiding for? Are they guiding for this reacceleration of manufacturing? Are they guiding for middle income and high income consumers to remain engaged? And I think when you think about the Fed, I mean, you know, Powell can go hawkish in the Wednesday meeting. In our view, he's not going to hike rates, right? Whether we're at peak rates from a Fed perspective in our view. And so I think that it's the pace that you talked about, confidence. The confidence is going to come with not the Q1. It's going to come in some of this data that's coming out on a week-by-week basis. PPI was lowered, was in line. You talked about PCE already. You're looking at reacceleration in the manufacturing economy. Does that offset the consumer? I think that, you know, prospectively, we need to think about where are earnings going to go, and more importantly, with inflation a little bit stickier, Scott, maybe we don't see those top line declines. Maybe the comps aren't quite as bad as they were, given the fact that we're going to see a little bit of that upward pressure on the top line.
I get it, but so then distill all that down to me on what your market view is now, and whether you agree with an Adam Parker who says, you know, the bull case was far more probable than the bear case, driving our judgment that there was material upside. I'm quoting from his note yet again, our views changed. Pasquarello, as I said again, I'll read to you. Times to go for the brake, times to go for the gas. My instinct is equity people should be tapping the brakes. Have things changed even incrementally or not?
In the short term, I think that we're getting, as we get further along in earnings season, Scott, there is more risk to the equity market. Earnings keep investors in their seats. They can look at the results, they can read through to the micro, and they get a better sense. Once we get out of earnings season, we get into that no man's land. And frankly, that no man's land is the Fed going to cut? Do they feel really concerned? What is this next economic data point? And the Fed has really backed us into that thinking. So outside of earnings season, we're being just as data dependent as the Fed is. And that's not good for the equity market. We need to keep a longer term view. The second half in areas like financials, banks in particular, is slated to be stronger. But if everyone is thinking about what does it mean the next few weeks, yes, at the end of earnings season, that macro takes over. And right now, macro isn't that supportive, especially with the Fed not having that confidence.
Shannon, I'm going to disagree with you because I think the idea that somehow the market being more data dependent is a bad thing would be true if the data was moving in the wrong direction or wasn't good. And right now, as Steve alluded to earlier, you've got stronger than expected GDP. Earnings season, as you mentioned and I mentioned, is going better than expected. Steve talked about some of the strength of the consumer. You're also not hearing any weakness from Visa or American Express, who reported about the consumer. So I think to the extent that we move past the next Fed meeting, obviously inflation is going to be a concern, and that's something to which we have to pay attention. But the data underlying the growth in the economy and the data boosting the stock market has been, for lack of a better word, pretty darn good. And I don't, at the risk of starting an argument here, I don't know why focusing on that better than expected data and strong data would be a bad thing for investors.
Because the S&P 500 is dominated, continues to be concentrated in the top end of stocks that sell at a higher than much higher average valuation. And so for me, it's a multiple perspective. The multiples for that higher end of stocks, which are impacted by rates, which are impacted by inflation, that's where you're seeing that shorter term weakness. And I think that if you look at the overall valuation of the market, that's where equity bears are going to pin their concerns because of this concern about inflation. So I don't disagree with you. The fundamentals of the underlying economy are still strong. I disagree in some ways with Adam in terms of the consumer. Yes, credit card delinquencies have moved up, but auto loan delinquencies have not. They are not back to pre-pandemic levels, even though credit cards are. So there is an undercurrent of growth. And to be fair, and Steve made this point last week, Scott, on the show when you weren't there, you know, we wanted growth to slow down a little bit. Like, this is a more supportive environment for inflation. But I do disagree. I think that as long as the market is looking at CPI, I think that's going to be an issue in terms of adding some additional volatility to the equity market.
I mean, bears would have you believe that growth is slowing too fast, inflation is getting too sticky, mega caps are overvalued, you know, blah, blah, blah. And at each sort of train stop on the way, the trains left the station without them. I'm looking at Nick Timmeros right now, Wall Street Journal, okay, puts on social media some 13 minutes ago. The New York Fed's measure of inflation persistence, okay, declined to 2.6% in March, from a downwardly revised 2.7 in February, and from 3% in January. So don't tell me that we've got some, you know, overly either sticky inflation problem or the fact that we're trying to tick in the other direction, because at least by some measures, it's not happening. And inflation is still trending, by virtue of even what the PCE reported, in the right direction. Yet, you know, you have the naysayers who look at the CPI, the last few, and say, see, I told you.
And let me add.
Yeah,
I'm sorry, Shannon, I meant to address that to you specifically.
Oh, okay, thank you. So no, Scott, you know, clearly, if you look at what we think inflation is going to be lower by the end of the year. The challenge right now is that we started with 6 to 8 rate cuts in November and December, then we went to 4, and now we're, you know, a little under 2 for expectations. And so I think that there are still folks in the equity market that are looking at the potential for rate cuts to be the accelerant or the justification for some areas of.
I'm trying to figure out, is that bad that we've you know, taken down the number of rate cuts?
The market went up 20% the whole time.
No, absolutely
We've taken
not.
up the expectations
Absolutely
on the
not.
economy.
Yes, and I think that is where, if you look at that tipping point, we're in this tipping point where the second half of the year is likely to continue to be supported by the trend of improving economic growth, perhaps not as hot, because there is likely to be some slowing, but that slowing will allow the Fed the latitude to be able to move. And so our view is that by the end of the year, interest rates will be lower, the economy will continue to be positive, and that we won't see a sharp uptick in unemployment. However, in this very short-term period, which, Scott, is what you asked me about, I think that there could be some volatility in this period between now and, say, mid-June.
Listen, Shannon's right about a lot of what she just said. I agree with a lot of it. The one thing I'll just reiterate from before about the larger stocks and interest rates, the reason why you care about interest rates and tech stocks is because they are what everyone jokingly calls longer duration assets. What does that mean for investors? It means your earnings are further out in the future. So if you are a riskier stock and more of the value of your company is in the terminal value, then lower interest rates is better. But for a Microsoft, for a Google, for a Meta, all of whom reported 17, 20, 25% EPS and revenue growth, there's earnings right now. In the case of Google, obviously now you have a dividend. There's cash return that happens right now, and those companies are much less susceptible to interest rates. And I would just argue, and I don't think Shannon necessarily disagrees, that in this type of an environment, those companies should get a premium multiple to the market. And to be clear, in the case of Meta and Google, the broad market's trading at, let's just call it 20 times forward earnings. Google and Meta are trading at like 22 or 23 times forward earnings. So it's not exactly, the group as a whole is not exactly screamingly expensive relative to a market which is trading by itself above its previous multiples. So I think, and again, I don't think Shannon disagrees, I think there is something to be said for those stocks getting a premium multiple, being insulated from the interest rate environment, the data underneath the economy and the stock market being relatively strong. And while I agree with Shannon, and I said earlier, you're probably going to have a bit of a choppy moment here while we sort out the Fed and the inflation story. At the end of the day, if those tailwinds remain in place, then all else equal, the bias for stock prices and risk assets should be to the upside.
Shannon, last word.
Yeah, listen, with this, the shorter term versus longer term, by the end of the year, rates are lower. We think growth remains intact, and our view is that there are opportunities. We just think those opportunities are in sectors outside of big cap tech, and I felt that way for some time.
So I'm just going to ask you one more question then, because I feel like it's open. It's left open. By the end of the year, if you want to talk about where rates are going to be by the end of the year, rate cuts and what have you, where's the S&P? Is it higher or lower than 5,100?
I think there's a possibility that it remains higher. I mean, that could go higher, but I think that it really relies on the fact that we need to see kind of this economy remain in this consistent groove. And I think that this manufacturing uptick, Scott, that we don't talk nearly enough about globally, I think that's going to be a helpful catalyst to some of these more cyclical sectors.
Shannon, we'll leave it there. Thank you, Shannon Sakosh at Dan Greenhouse. Appreciate it as well. To Christina Porcenevelos now for a look at the key stocks she's watching into the close. Hi, Christina.
Hi, Scott. Well, consumer fintech company SoFi plunged today, even after beating the street's expectations for the first quarter. And you're wondering, why is the stock down 11%? Well, Wall Street was looking for second quarter revenues about $580 million, but SoFi said they can only expect to post revenues of a range of $555 to $565 million. All you need to know is a lot less than what the street was anticipating. The company saying that 2024 remains a, quote, transitional year, hence that 11% drop. Domino's may be used to putting toppings on its pizza, but today they topped Wall Street earnings estimates for the first quarter while posting revenues that were in line with estimates. U.S. same-store sales grew 5.6% during the quarter, which the CEO attributed to the company's 5-year Hungry for More plan. Investors are clearly hungry for more of this company. You can see shares up 5%. Scott?
All right, we'll see you in a bit. Christina, thank you. Christina Porcenevelos. We're just getting started. Up next, navigating the tech trade. It's a big week again. Amazon and Apple results are front and center this week. Plexo Capital's Low Tony standing by with what he's going to be watching from those reports. Join us right after this break. NASDAQ giving up earlier gains, hovering just above the flat line this hour despite a boost from Apple this morning. That stock climbing after getting an upgrade from Bernstein. An analyst there who was on the sidelines for some 6 years, upgrading that stock today. We are keeping a close eye on both Apple and Amazon ahead of this week's earnings report. Here to discuss, Plexo Capital's Lo Tony, a CNBC contributor. Welcome back.
Thanks for having me.
So before we look ahead, let's look back. I mean, what was your takeaway from last week from these big tech reports that came out?
Well, like I said, AI means both artificial intelligence and additional income. And what we saw, I think, from the big three that I focused in on in Alphabet, Microsoft, and Meta, you know, the first two, Alphabet and Microsoft, really delivered, and I think they've given a very clear articulation of how they're looking at the opportunity in AI to drive revenues, and at the same time have really articulated a little more clarity around how the return on investment from the investments that they're making into their infrastructure to support AI are going to play out. Now, I think even though Meta did deliver great returns, the lack of clarity around how their investments are going to drive additional revenue, I think, needs to be further understood. You know, in fact, when you look at Meta, they announced that they're going to invest an additional $5 billion or so into infrastructure, kind of bringing that to about $37 billion for the year. And I think investors are having this eerie sense of reflecting back to what happened to Meta stock when they announced heavy investments for AI, you know, the artificial, the virtual reality, right? And so I think this metaverse investment that Meta did that didn't quite play out yet, I think investors are looking at AI now and wanting to just have more clarity from Meta around how those investments are going to drive growth.
Was Alphabet the standout? I ask you that also. I mean, the fact the stock's up 10% over the past month. And also, it continues to trade at what some would suggest is a much more reasonable valuation than some of these other names with, you know, not nearly as much of a premium as a couple other names that you could easily point out.
Yeah, no question. That's a great insight, Scott. Well, look, first of all, it doesn't help when a dividend is announced along with a share buyback. But putting that aside, I think looking at the comments around the CEO for the infrastructure that Alphabet has across its business units, you know, they're very bullish that that's the best infrastructure in the business to be able to deliver on the promise for AI. So I think going back to your comment, yeah, I think Alphabet is very well positioned and again has clearly articulated a return on investment strategy that we feel will deliver at least a 50% return on investment on an annualized basis. Look, I think it also shows that the search business, the YouTube business, those core businesses for the revenue drivers and income drivers for Alphabet are showing a lot of resiliency. And, you know, as we look towards this environment where we may see, you know, increasing or at least no rate cuts, you know, normally, you know, that environment is devastating for growth companies. But, you know, as your guest alluded to, that's because a lot of these, you know, revenue streams are on the back end. But when you look at a company like Alphabet, they're delivering cash flows with the dividend share buyback and delivering revenue right now. So I think it's very well positioned.
Let's talk Amazon and then Apple. But what are your expectations here from Amazon this week?
Yeah, you know, I think Amazon is going to deliver solid results. You know, I think what the market's looking for and everything that I'm seeing is, you know, the analysts feel like there's more that could be delivered from Amazon stock. And when you look at the fundamentals, you know, I would have to agree. I think there's more that Amazon can deliver based on, you know, what we're seeing with these trends at some of these other companies around the cloud business.
And then Apple, which I mentioned at the very top of our program, gets this upgrade today by Tony Sacconaghi over at Bernstein, who hasn't had a buy or outperform on that stock low in 6 years, but finally comes off the sidelines and says, quote, buy the fear.
Yeah, well, there's definitely a lot to fear when just thinking about that. Well, look, first of all, I mean, the analysts are expecting probably $1.50 on a little over 90 billion in top line, and those are solid numbers. But there's a little bit of a drag because of what's happening in China. I think the interesting takeaway that I had from the Bernstein analyst was, a lot of people are concerned that this drag in China is because of shifting consumer behavior, especially amongst the younger audience, coupled with the fact that some of the domestic manufacturers in China have really made strides to add 5G technology along with more advanced features that are at a price point which competes with some of the lower end iPhones that Apple is selling in China. Now, this Bernstein analyst has more of a contrarian view. He doesn't, kind of feel he feels that that's just cyclical, right? A lot of that is because of the pressure that the Chinese economy is under, and kind of once that pressure is relieved, then the consumer's taste will shift back towards this higher end price point that iPhone delivers. I'm not sure. I think if we think about the cycle, we didn't really see a lot of consumer demand from the 5G upgrade. It was really more of the push from Apple to make sure that the functionality, the foundational functionality will be in place once some killer apps come through, maybe in the form of artificial reality. We'll have to look at those vision numbers, but perhaps we'll see a return to normalcy with this next upgrade cycle when much anticipated will be some of the AI functionality built into the phones. Maybe that will have a little bit more of a consumer pull.
It's going to be a fun week. Thanks for previewing
Absolutely.
it. Lo, I appreciate it. We'll see you soon. Lo, Tony.
Sounds good. Take care.
Up next, was last week's choppy trading just a temporary setback or the sign of a bigger pullback ahead? Top technician Jeff DeGraff will give us his take just after the break. The S&P coming off its best week of the year, still on track, though, to snap a 5-month win streak as investors debate whether the pullback from the March highs has run its course. Joining us now, Jeff DeGraff. He's the chairman and head of technical research at Renaissance Macro. It's good to see you again. You look at this snapback, we'll call it the bounce. Do you believe in it? Should we, from a technical standpoint?
Well, I think so, Scott. I mean, it's not a lock. There's three things that we look for a good, what we call tactical lows in an uptrend, and no doubt we're still in an uptrend, so that's the good news. We look for an external oversold condition. We look for an internal oversold condition, which both of those we've had. And then we like to see a sentiment flush. We like to see a rise in put-call ratios and some of the other high-frequency data, which we haven't really seen. But we did get that external oversold condition. Our oscillator got down to an oversold level that usually provides some type of bounce. I think the risk is when you're in an uptrend, if you wait for all three conditions, it's great to have them. It obviously improves the probability that good things are going to happen. But if you wait for all three to happen, the risk is that you miss out. And so when we get 2 out of 3, as Meatloaf said, it ain't bad, and we stick with the trend.
I get you, that we were due for a bounce. I think everybody would suggest that we were. But that doesn't necessarily mean that the risk-reward for stocks in the near term, at least, hasn't changed, even if it's just an incremental move. You start talking about words like stagflation, et cetera, maybe that's a difference maker.
Well, I mean, there's no doubt, and it's been the case for at least 6 months now, that we think the biggest risk to equities is elevated 10-year yields. That translates specifically into elevated real yields. We're right at the cusp. We're right there. When we get to this 2.25% in real yields, that starts to push against equities. It's not dramatic, but it certainly gives us more of an elongated pause until you start to catch your breath there. So we'll see what happens, but I think absolutely, if you had to say what is the biggest risk to equities here, from a valuation standpoint, all these things filter back to real yields, and that's one thing that I think can keep a lid on things. But keep in mind, we are in an uptrend, and usually what that means is that you're going to go into a consolidation, you're going to pause, you're going to refresh, and then you're going to break out higher again, and I think that's what we're doing here.
Differences are obviously what helps make a market. I find it kind of interesting that whereas Adam Parker puts out a note suggesting he's less bullish, at least right now, because maybe China is not recovering like we expected it to, whereas you say you're becoming more strategically bullish on China. How so?
Yeah, that's interesting. I know Adam, but I don't read his research. But that said, we made a tactical call on China back in early February. Now, I will be the first to say that was luckier than it was good. I mean, there are obviously signposts that we used to buy, and it was really very timely. That was a tactical call. Now, sometimes, and this is one of those times, that tactical call will turn into a strategic call. That's because we start to see evidence that the trend's changing. We saw a breakout in Hong Kong. Obviously, that's the kissing cousin to China. We're now seeing a breakout, a 65-day breakout in the Shanghai 300. The 50 days not yet through the 200-day, but the price is through the 200-day moving average. So incrementally, build by build, we're starting to see better things happen. And I think it's really reflected in some of the metals that we're seeing globally, right? I mean, copper's broken out, it acts well. Maybe what we're seeing is these interest rates here are going to end up putting a lid on the inflationary pressures, on the growth pressures here domestically, but at the same time, the baton gets passed to China, and they actually start to help elevate or at least buoy global growth. We'll see if that happens, but we think the equity markets in China have turned. They are turning, but we are actually making the case that they're turned.
All right, we'll see you soon. Jeff, thank you.
Thank you.
Appreciate your time. Jeff DeGraff up next, tracking the biggest movers into the close. Pippa Stevens is standing by with that. Hi, Pippa.
Hey, Scott. One streaming name is popping after a call. The stock is oversold. We've got all the details coming up next.
I'll try.
We're 15 from the bell. Let's get back to Pippa Stevens now for the key stock she's watching. Pippa.
Hey, Scott, Phillips is surging after the medical devices company agreed to a $1.1 billion settlement in the U.S. for personal injury cases linked to the recall of some of its sleep apnea devices. The company did not admit any fault or liability or that any injuries were caused by its devices. Those shares up 26% at a 2-year high. And Roku is in the green after Seaport upgraded the company to a buy. The firm said the stock was oversold on fears of streaming competition, but that Roku is central to the connected TV advertising market and the risk reward is attractive. Scott?
All right, Pippa, appreciate that. Pippa Stevens still ahead. Tesla shares are surging today. The automaker reaching a key deal with China, marking a major milestone for its driver assistance service. The details and what one top analyst is saying this could mean for the stock, we'll tell you next.
Off your first order.
Coming up next, NXP reporting top of the hour. That stock's seen gains of more than 30% over the last 6 months. So, can that momentum continue? We will discuss when we take you inside the market zone next.
Man, look at that bounce. I can't believe it. Was in that call.
Market Zone. CNBC senior markets commentator Mike Santoli is here to break down the crucial moments of this trading day. Plus,
SPX.
more than 3 years.
God.
Phil LeBeau, of course, on that, and Christina Partsinevelos looking ahead to NXP.
Let me tell you something here. I caught this knife, and it went down a little bit on me, but I just held on to it. And I sold some on a 60-cent pop, and I held on to a couple more, and then I sold it right here. And the motherfucker, within a minute, jumped $400. These things are now, I mean, it's 5,100 striker, $1,360. That's $1,100 and some dollars, $60 from that knife. Okay, think about this. These guys have had it wrong from day one on CNBC. So now they're thinking, they're coming up with different excuses. They're saying he's going to be very dovish tomorrow. I'm going to have to, again, think just the opposite of them guys. Because they got so caught up in this scam of 6 rate cuts, and they pumped the market on that. Now they say rate cuts don't matter. It's all about the PCI, and 3 weeks ago it was all about earnings. That's all that mattered. So there's just a lot of mix, and they're trying to keep this market up, knowing that they were completely wrong. So me, I'm going to look at it like, I know they're wrong, and I know we could have a lot of volatility, but I still got to be I got to still be on the receiving team and be offensive with my trades. I can't become a total bear because I feel like I am one. Because I can't fight against these guys. They keep making up excuses and excuses. It's just so, gosh, I'm so glad I didn't listen to it all day today and traded all them. Man, look at this thing go. I'm so pissed. What is today? Am I a day ahead again? When is FOMAC? Shit. Oh, economic events. Market drive, wonder what that is.
And so we'll see if that carries through some of the big guys like Amazon this week, where you basically say, aha, that's why we pay the premium for these dominant companies.
So we had a bump about, I don't know, 59 minutes ago. Right back to the recovery though, because we're going to go out green across the board. You see it, and I'll see you tomorrow into OT with Morgan and John.
Green barely. God, incredible.
Of catalysts for investors, that is the scorecard on Wall Street. But the action
I mean, shit, 1540.
Overtime. I'm Morgan Brennan with John Ford.
Yeah, buckle up. It is the busiest.
Wow. There's a lot of volatility going on right now. And I don't know what to think, really. This is a very emotional game. It's hard to keep your emotions out of it.
Chris McCarthy, President and CEO of Showtime, MTV Entertainment Studios, and Paramount Media Networks. And the third member of this office of the CEO is Brian Robbins, who's President and CEO of Paramount Pictures and Nickelodeon. These three men, they say, will work closely with the CFO of Paramount Global, Naveen Chopra, as well as the board of directors. This release goes on to say the office of the CEO is working with the board to develop a comprehensive long-range plan to accelerate growth and develop popular content, materially streamline operations, strengthen the balance sheet, and continue to optimize the streaming strategy. I haven't gotten a chance to look at the actual earnings yet, but that seems like that'll be secondary to this news that we were anticipating out today. Sherry Redstone putting a statement here in this release saying she has confidence in this team. No comment in this release as to whether or not they're going to be moving forward with that Skydance deal. We reported earlier today that Skydance and its consortium, led by David Ellison, made its final offer yesterday, so no word yet on what the plan is to respond to that. Back over to you.
Of course, that's exactly where I was going with you, Julia, is with Backish now stepping down, what does that mean in terms of the possibility of this deal moving forward, especially since it is a complex deal and we're talking about two different classes of shareholders in stock here?
Yes, well, I think Backish was expected to step down if that deal were to go through. So this would be part of sort of a transition here. But what I understand is part of the deal that was offered yesterday was sort of a sweetening of the deal to make it better for shareholders, the sort of second tier of shareholders other than Sherry Redstone, who has the controlling votes here of the company. I haven't seen anything in here that has any commentary on the Skydance offer or the offer that Apollo and Sony are expected to make together as early as this week. But we're going to continue to dive in. I'm sure it's going to come up as a question on the earnings call, which is set for 4:30 p.m. Eastern. And in the meantime, I haven't seen the earnings release yet, but we will take a look at that and get right back to you with those numbers.
Okay, Julia Borsman, thank you. As the shares shoot higher here in overtime, up about 5% right now. Well, we do start with the market specifically. The NASDAQ S&P 500 coming off their best week since November, starting this week in the green as well. Joining us now is Emily Rowland of Hancock Investment Management and Tim Urbanowitz of Innovator Capital Management. Good afternoon to you both. Emily, I'm going to start with you because we are in the thick of earnings season. We know that has been driving more of a risk on sentiment here in recent trading sessions. And oh, by the way, we're starting to see the pickup in deal making. Look no further than potential with Paramount as the latest example.
Yeah, absolutely. The story to us so far in earnings season has been the tech and communication services sectors really carrying the market here. Earnings up 30 to 40% on a year-over-year basis versus just about 2% for the S&P 500. Now, of course, the reaction to those earnings reports has been pretty mixed. A lot of the good news was already in the price, so we're seeing a variety of reactions. And in fact, the market's starting to reward those momentum stocks that have worked so well over the past 6 months after a week or so of being dragged down. So interesting, notable environment here. Earnings look great, but again, the market's been in love with a lot of these stocks for some time, so we may need to let a little bit of the air out here.
Okay, Tim, we had a pullback. It's almost like it never even happened.
Well,
and so I wonder what that means for this week, because we did see markets or stocks move a little bit lower on the Treasury news we got in the past hour or so. But right now, in general, it really is the calm before the storm between
I like her.
the Fed decision,
She's
the
cute.
jobs report.
Okay. Well, it was good volatility today. I'm really getting off on this charting. Now, today I felt like I hit a new plateau. It really did. This knife, I mean, I just seen this knife and I'm going, and let me get a bigger chart. Oh. So this was really, how did I do this? I had this down. Okay, I got it. I know how I did it now. So we had that trend line right there. Well, that wasn't that one. Oh, here it is. Never mind. I'm a little ahead of myself here. I forgot how I had this drawn. It came to here, so it had to have been right here. Yeah, that's it. A lot of megaphones. A lot of megaphones. Then we broke below, and I jumped right into this thing and scalped it for 60 cents and held on to 2 contracts and run it up to here and got out of the trade. Somewhere in here. So probably right here, on the way back down. Because then that big candle came in, and that one candle alone was $400. And I just kind of went, oh. And then a few minutes later, it's up to $1,000, $1,500 from 200. So it's good to be on your toes. This reversal up here was off 2 dojis. 2 dojis that caused that reversal. So we're going to go ahead and get on out of here. I want to wish everybody a happy day. If there's anything that can help improve this, please let me know in a private message. Do I have too much fun, or am I too much of myself? Do I need to be more professional? Anything to help you all. I'll catch you all later. Yabba dabba doo.